tagline, which is the investor-entrepreneur interface. We've structured the event, to have very rich content, lots of time for networking, because that's one of the primary reasons you guys are here. And hopefully we can help you initiate a transaction as well. So when it comes to the content part of it, if you had a look at the event agenda, the way we structured it is kind of to move from the macro to the micro. So the inaugural session, you will see a lot of, very prominent speakers from both, advisory firms and, investing firms, who will give you a big picture view of how global as well as local Indian economic and political factors, as well as issues affecting the private equity and venture capital industry, are going to shape going forward capital availability for entrepreneurs as well as for investors, right? For them to onward invest into companies. So the morning session is going to be a big picture view. So it's kind of important for us, because at the end of the day, we all know, and from the last few days, you can't escape the big picture, right? So the US affects a lot of economies around the world. As they say, if the US Fed decides to do something, you have ripple effects on the Indian market. So we are going to have a global markets expert as part of the panel. We're going to have investors, because, this clearly reminds me, the Acche din that we are kind of looking at today reminds me about, 2007-8. As I said, this is the 9th conference that we are organizing under the APEX. So a lot of what is happening today reminds us of, those days. And, hopefully some lessons to be learned, from that period as well, that, we can use not to have, a 2008 as well upon us. So investors will kind of talk to us about, that aspect, are these times for real? What is it that they see different from those days to now? So this is big picture stuff, when we start off in the morning. Then we're going to have, private equity, an entrepreneur at 11:30 who's seen private equity from multiple dimensions. So he has been an entrepreneur in the industrial space, raised private equity, exited this venture very successfully, and launched a more consumer-facing business, but again within the manufacturing realm, and has attracted money from the same investors who backed this in the previous venture. That's very, very significant, and very good names, as new investors as well. Not only that, this gentleman has gone on, one of the very first things that he did after exiting his first venture was to allocate a pool of capital to be invested into entrepreneurial businesses. And then I understand that he subsequently also started to invest into private equity firms, as a family office kind of thing. So, it's going to be a very fascinating keynote to hear from him as to how his, journey with private equity has been. And then that's going to be followed at 12 o'clock by a panel which will deep dive into the details. So as I said, big picture keynote followed by a deep dive into what are the take-home lessons. We've been through 2 cycles at least, a lot of it would remember in this decade. And what are the kind of lessons that both entrepreneurs and investors can draw from these, and how to prepare for the boom and bust cycles. What are the best practices? So that's going to be the focus of the 12 o'clock panel in terms of how private equity as an investing group as well as for entrepreneurs can be sustainable. If the Infosys tagline is your PSPD, right? So predictable, sustainable, profitable, right? So that's the kind of can private equity get out of this boom and bust cycles, and what can entrepreneurs do to kind of be in sync with that. So that's the focus of the panel. Then we get post-lunch a very new and important kind of source of capital within the domestic economy, because a lot of the private equity money today is from overseas. So is the family office. So as I said, Mr. Rakesh Malhotra, the keynote speaker, is one good example. Mr. Ronnie Screwvala is another good example, who exited UTV to Disney. And one of the very first things that he did is to kind of start investing in private companies. And increasingly, more and more, the Infosys founders have taken to this as well now. So they are setting up family offices which are becoming a source of capital, very important one, for both private equity funds to tap into for raise their money, but they're also doing direct investments. So in that sense, to understand the dynamics of how the family office, this new animal in play, how does the dynamics of that work, do they want to invest directly? Do they want to invest directly? We have a panel which is a kind of an interesting mix of both kinds of investors. So that's, post-lunch. And after that, as I said, we will get into the micro, the focus, the 4 o'clock panel. It's all happening now, right? So end of the day, we have, every other day we have an Economic Times headline about, some e-commerce venture getting funded or acquired and so on. So that's the flavor of the day. But if you look at the dynamics with Flipkart as a big story that everybody talks about, today it's like two guys with a plan and an ambitious plan at that to raise dollops of capital, take on, even global companies is no longer something that happens only in Silicon Valley, right? So it's all happening right now and in India. So the last panel is going to focus on the details with the clear, sharp focus on the entrepreneur. So we're going to have 3 entrepreneurs there, 2 of them who have exited the ventures, 1 of them has become an angel investor, 1 of them is still with, the companies that, acquired his venture, and talk about the whole journey in terms of how an entrepreneur should prepare for this whole venture-funded journey in terms of, raising capital, growing, exiting, and then, moving on. So that entire spectrum will be covered in detail at the last panel. So in terms of networking, we're going to have 2 breaks during the day, for coffee breaks, 1 long 1-hour lunch break. So we'll have plenty of time. So do make effort to meet those speakers and investors in the room as far as entrepreneurs are concerned. But, we will make sure that you will be able to reach out to them post-event. We are actually going to bring out a booklet, which will have the profiles of all the companies who are here and their funding requirements. So even if you do don't manage to catch all the investors here, not to worry. We will send this publication out to them. Believe us, this is like very popular publication from the angel investors all the way to the largest private equity fund. Once we announce the fact that this booklet is available, it gets downloaded on day 1. So, not to worry, do spend the time to network, but, do focus on getting back in for the content. We made it very rich for that reason. And one, of course, just to make the thanks to our sponsors, in terms of making not only the economics of such a conference possible, it's also that they've helped very closely with us in terms of structuring the content and so on. So basis funded services, this is the 5th year that, they've been associated with a particular conference, Sesh and others at Basis. Thank you very much for that. Of course, our knowledge partners, Avalon Consulting as well as FinSec Law Advisors. Thank you very much for, supporting us for the 2nd straight year, Raj and company. And so we'll get ahead with, the event. So as I said, I would like to have Raj, join us. Raj is the chairman of Avalon Consulting, who is going to chair the first session. Then we could have the rest of the speakers please come on stage. Mr. V. Anantha Nageshwaran is an expert on global financial markets and the co-founder of Avishkar Venture Fund. Mr. Vish Narayan of TPG Growth. Mr. Rajesh Raju from Kalari Capital. Mr. Mahesh Murthy of Seed Fund. So we have a very eminent panel, going to speak to us to begin with at the big picture. To set the stage for them, we're going to have Mr. Sridhar Venkateswaran, Director of Avalon Consulting, take us through some of the issues that the private equity and venture capital industry is currently going through, so that it sets the stage for the panelists to follow in terms of, the big picture and also the issues facing private equity as they try to deploy capital into India in the year going ahead. Thank you very much. Sridhar, over to you.
Thank you, Arun, and warm welcome to all the panelists and to everybody who's made time to come to this event. This is the 2nd year that we are taking a view on where the private equity industry is headed, what's happening to their investments, and what are the kinds of issues and challenges the investor and the entrepreneur ecosystem is going to face going forward. Arun has very appropriately chosen a tagline which resonates with everybody, given the success that the political party had in adopting this tagline. And obviously, the question is, does this apply to this industry as well? Let me start off by summarizing what the data tells us, and then going on to some of Avalon Consulting's own perspectives on what's the way forward. In terms of the hard numbers, investments have grown very significantly in 2014, 61,000 crores versus 42,000 crores. This growth has been driven by e-commerce deals, and actually once you take this number out, there's actually been a decline in some of the other core sectors itself. So once you go behind the headline numbers, you realize that there is a lot of euphoria. This has been driven by the fact that we've had a very favorable election results from the point of view of decision making for the country. And we have been helped greatly by various favorable macroeconomic developments, which I'll talk about a little later. But if you speak to industry, and as consultants, we have interact with many clients across different sectors, what the fundamental message that's coming out is that there are little improvements on the ground, and businesses continue to struggle, whether it's in doing business or dealing with the economic environment itself. So that's a broad summary of where the investment environment looks like. If you come to the flip side, the exits, we had highlighted during the conference last year that there is a looming logjam. We had about 84,000 crores of invested capital at the end of 2013, which was 6+ years old. And the idea was, what's the exit going to look like? What's happened in 2014 is that number has now further ballooned, and it's grown to about 94,000 crores. Exits have been, a reasonable number in 2014, but if you go into, again, the granular detail, bulk of the exits have been less than 3-year deals. So it's the taking advantage of the boom in the share capital. The newly invested deals saw the opportunity and exited. So the problem that we highlighted is now for real, and it's expanding. Now, what's the way out? And this is really our perspective, and there are two sides to this. One is we are seeing increasingly private equity taking a more interventionist approach. They are discussing with the management, trying to get more and more value enhancement initiatives off the ground. We ourselves are working with a couple of private equity companies in this area, where the idea is to how do you make exit possible in the next 18 months by focusing on certain specific initiatives. We all know that the forecasts for India are looking good, so how do you make sure that as the tide turns, there are good exit opportunities for these entrenched deals which are more than 6 years old. Having said that, this is not all about exit. We also find that there are going to be very interesting investment opportunities in high potential sectors, and these are not necessarily the newfangled sectors, but even the older agribusiness or chemicals are going to see very, very interesting opportunities to invest. We have invested some time, and we have tried to highlight certain subsectors. I'll touch upon one of them as part of this presentation. This detailed presentation is going to be available off our website and will be emailed out to you. So there are some interesting investment opportunities as well. So to quickly run through some of these key things with the actual data, as I said, we had this whole period between 2006 to 2009 when there was this euphoria, which Arun also talked about. The peak investment was about 60,000 crores in 2007. We see 2014 back to that kind of number. It's 61,000 crores of investment which actually took place. The average deal size is at an historic high. So clearly you're seeing, if you go by the tagline, it's apparent that it seems to be Achedhan for everybody around, both investors and entrepreneurs. But as I said, if you deep dive behind the numbers and you remove the 25,000 odd crores of e-commerce deals, which has funded this booming deal, and we all know which are the ones which have managed to raise significant capital. Once you remove that out, you realize that the core sectors like manufacturing, healthcare have actually seen a decline, and a sharp decline at that in terms of invested capital. So once you take the veneer out, it doesn't look like that much Achedhan for the underlying industry. And as you know, private equity tends to be swayed by certain trends, and there's been that happening as far as the e-commerce is concerned. The underlying driver which everybody has seen is the promise of a stable government, the election results, drop in oil prices, lower inflation, many of which are largely actually beyond the control of the Indian government. These are global geopolitics which plays a role over here. And this favorable macro environment resulted in inflation coming down and the corresponding rate cuts that we have seen. So clearly we are poised for something good as we go forward. This has obviously resulted in a huge bull run in the capital markets. But as they say, the share market investors tend to be savvy, or they tend to be over-optimistic, because the underlying growth numbers, barring what you've seen, the juggling of the figures by CSO, insisting that 2013-14 was a 6.9% GDP growth. But if you exclude that, we all know the reality on the ground is that there hasn't been that kind of real growth in the industry. So in terms of the invested capital, as I said, about 13,200 crores actually exited in 2014. The IRRs were approximately around 12% for the industry as a whole. However, again, if you deep dive into the exits, what's apparent is a large part of the exits is less than 3-year-old deals. It actually jumped up, almost doubled from about 2,000 odd crores to about 5,000 plus crores. And the deals that really need to exit, which is more than 6 years old, is still struggling to find their way out. And whatever exits that have happened of the older deals, you see the IRR numbers there. They are all in single digits. So clearly the exits have been swayed by the movements in the stock market, which has resulted in some of the the lower pedigree, recent pedigree deals exiting from the industry. And hence, what we highlighted last time, the logjam is for real, and it's rising. What's interesting to look at is if you consider that this number of 94,000 crores, and you see India's track record of exits, the highest exits have been in 2012 at 16,000 crores. So you really come to realize that there is a huge struggle within the industry, and it is only going to get worse, while all the forecasts, and you've seen the forecasts which have come out yesterday talking about 7.5% GDP growth for the next year for India. All that sounds good, and it actually presents an opportunity for both the entrepreneur and the private equity investor to prepare and see how to leverage this opportunity of the economic growth to actually create a new high on the exit side rather than the investment side. And that's really where the focus needs to be, at least in the short term, in the next couple of years. And if you see in terms of sectors, there are IT, ITES, energy, media, BFSI, several of the sectors which have to take advantage of this coming economic growth which seems to be on the cards to actually perform well and make successful exits. So how does both from a private equity investor standpoint and from the entrepreneur standpoint, how do you actually take advantage of this? And we as consultants, try to come out with approaches and methodologies to tailor to specific situations. And as Avalon Consulting, we have come out with this value enhancement approach, which really looks at 5 key dimensions. You know, the idea is to, from a private equity standpoint, unless you create a growth strategy with the investee company and rediscover growth in the context of where the economic changes are happening, and then create alignment with the promoters to say, yes, these are the ways in which the company needs to look for growth. Prepare yourself either in terms of governance, organization transformation, get the right kind of talent. If you need to look at some new segments to tap into for that growth, bring about the operational efficiencies now before the growth actually starts hitting, and then do what we call a stress test, saying in 6 months or 9 months' time, after you have rolled out these value enhancement initiatives, if you were to look at that case again and say, would you invest in such an enterprise at that point in time? So this becomes a kind of a good, solid approach to look at over a 9 to 12 to 18 months scenario to actually prepare the company for a successful exit. And we are finding this resonating with more and more private equity companies, and incidentally, even the promoters who would like to, if possible, access the next round of growth capital from the right types of investors. So we are seeing that this kind of methodology is needed going forward. Now, having highlighted that there is an issue as far as exits are concerned, the question today is, are we looking at Acche? Now, as I said, there are going to be opportunities to invest as well. And we have looked at examples of sectors and tried to highlight some rationale and some types of companies to look out for in certain sectors to which we feel will be attractive investment opportunities. So if you look at the broad agribusiness category, there's agrochemicals, there's micro irrigation, there's dairy, there's meat products and animal feed, no matter that we can't eat beef in this environment, and there's processed food. So there are a number of subsectors within agribusiness, and they are going to see some very attractive, very significant investment opportunities in each of these areas. In dairy, the business model itself is likely to set to change as the milk needs of the country gallop with the rising disposable income. In agrochemicals, there is going to be the huge opportunity in exports of branded generics coming out of India. The flip side of the pharma growth that you're likely to see, certain companies are positioning themselves very well to take advantage of this opportunities. There's going to be new types of chemicals needed, increased use of fungicides are needed given the land shortages that you're going to see in the coming days. We have been talking about micro irrigation for many, many years now, but we are now at the cusp of real opportunities over here. There are, of course, the larger Jain irrigation multinationals like Netafim who are already present in this industry, but there are a number of good regional players who are likely to see a huge jump in growth taking place. So these are just examples to set the context for the panel, to say that there are a number of investment opportunities, and I would like to paraphrase that we are not talking as much about Acche Din as much as Acche deals. And so there are going to be Acche deals and there are going to be Bure deals. So it's up to you as both investor and the entrepreneur to find the type of entrepreneurs to back. And like agribusiness, we have a few more examples in different sectors, whether it's healthcare, whether it's consumer and retail, chemicals. These are all available off our website. And we'll be happy to also interact with some of you during the course of the day. In the context of these opportunities, let me hand it over to Raj to talk about, are we talking about Acche Din or are we talking about Acche deals? And how is the macro environment going to impact the way these things shape up? Thank you.
So we had a very interesting presentation by Sridhar. We started a bit late, unfortunately, but that's not going to mean that we're going to shortchange you in your Q&A. I'm going to cut short what I was planning to say and let you listen to the views of some of the eminent panelists you have here. Not some, all of them are eminent. I was told I don't have to introduce them, but I think it's only fair that you have an idea of what to expect from each of them so you can direct questions to them properly. All of them have tremendous experience, not just in India, but globally. They actually worked abroad. And in sectors as diverse as financial services and management consulting. So you can expect solid stuff from them. We have Mahesh, who is a maverick, who comes up with all out-of-the-box ideas. So you can always provoke him and he will give you some fantastic insights of what he thinks the world is going to be like, or what India is going to be like, and what the opportunities for you are. We have a thinker and a brilliant person. He's a doctorate. He's written books on derivatives. He teaches, and he's been an investor. So, and we have here Vish, who's got a lot of experience. It looks as if he started working at the age of 6 from his youth, but he's worked across private equity and in consulting. We have Rajesh, who's been an investment banker and equity analyst in the US. And then for the last 9 years, you've been a private equity player in India. Wide experience. So you can ask him all the kind of questions about what opportunities certain sectors have for you, etc. Now, if you ask me, what do I think about this coming year, financial year 15-16, I'm an optimist. Sridhar has told you about what challenges private equity faces. It's a real challenge. I'm told each time they put up a proposal to the investment committee, the committee asks them, what is the exit strategy? Because exit has become a problem. I just want you to bear it in mind. That's why this was elaborately explained. You better, as an entrepreneur, know what exit possibilities are there and be clear about that in your model. What you should also understand is that there are lots of opportunities in the coming year and the coming years. It's not as if every sector is an opportunity for everybody. There will be some niche areas within which you should figure out what the opportunity is and ask questions. Now, while on the one hand I say that it's not going to be a bed of roses for investors or for entrepreneurs, I'm saying the opportunity is huge. Back in 2013, August, September, I gave 4 talks in Mumbai about how the sentiment is going to change in 2014. And you might remember that in 2013, everybody was crestfallen, shoulders are drooping, and they felt that this country has no hope. And even international companies used to say, don't tell me about the India story, it's all over. India story is not over, it's starting again. I said that in 2014, we're going to see a huge change in sentiment. That's happened. I'm going to say that 2015, we're going to see actual change on the ground. Let me tell you a little story. Some of you may have heard it, but it's worth repeating. In June last year, there was this guy loitering around a VIP bungalow in Delhi. And the cop there found this suspicious character and told him, what are you doing here? He said, look, I've come here to meet Dr. Manmohan Singh, Prime Minister of India, and he lives here. He said, no, he is no more the Prime Minister of India. He doesn't live here. Please get lost. But next day he came and did the same thing. He got the same answer, was driven away. This went on for 4 or 5 days. On the 6th day, the cop got really wild and said, what kind of an idiot are you? Haven't I told you that Dr. Singh doesn't live here? He's no more the Prime Minister. Why are you coming and doing this every day? He says, it just feels very good in the morning to hear that. He's no more the Prime Minister. So we have today a government which is led by somebody who knows what he wants to do. We hope that he'll unclog all the arteries that have clogged India's economy. And therefore, there's reason to believe that there are a whole lot of sectors where opportunities are going to open up, and they are opening up. As a consulting firm which looks at lead indicators of what might be going up, what are likely to go down, we have a feeling based on data that lots of specific opportunities are coming up which are worth pursuing, both as an entrepreneur, as an investor too. Having said that, we're also aware that there are lots of global challenges. It's not just potential pruning